Alrighty, folks. The other day, you heard me talk about Ryan Pineda and his calls for 2025. I think there's a lot of things that he sees coming in 2025 that we need to discuss. We might need to debate. We may need to disagree. But I do think there's some things in there that we can't miss because if you do, you're going to get smacked. The one and only Mr. Ryan Pineda. How you doing, sir?
It's good to see you again, as always.
Nice to see you as well. I will be back in Vegas this Saturday, so I look forward to getting back to Vegas and enjoying my new home. But why don't we talk about 2025? I like the fact that we just entered Q4, right? We're recording this on October 1st, and you are already laying out a plan, a roadmap for 2025. Because if you don't prepare or plan, you could get run over. So I just like the fact that you're leading by example.
Yeah, well, and I think too, everything that's going to happen in Q4 for real estate investors has already been done. Like
Exactly.
everything we're going to sell this quarter, I bought in Q3 or Q2, or we've been working on for however many months. So in my mind, this quarter's already done. I have to prepare
Exactly.
for what we're going to be doing next year.
Yeah. And I don't think a lot of people realize that. Again, real estate has very long sales cycles. Even if you list something today, good chances are you're not closing it to middle of December. Throw in the holidays, it could be a Q1 closing, even
Yep.
if you listed today pretty easy. So you're absolutely right. Q4 is made. The other thing I will say, again, I've been doing this for 20 years. I was a commissioned salesperson forever. Dude, I don't know what it is about Q4, but so many people take their foot off the gas.
Yeah.
Wild.
Yeah. Yeah. Well, I think because there's less transaction volume and everything else, so people are just like, whatever. I don't know. They shouldn't be, but it's how they are.
I mean, I looked, Olivia and I did this a couple of years ago. We looked at all of our closings, which are well over 100 closings personally. And I think it was 67, it might have been 68% of our transactions closed from Halloween to New Year's Day because we never stop, right? The
Yeah.
day is, daily discipline is a daily discipline. So it's amazing to think that competition goes away. You still have some motivated sellers. Some motivated sellers are incented by end of year tax year. So
Yeah.
you can get your best deals, and I'm living proof of it between now and the end of the year.
Well, especially if you're flipping, right now is actually the best time to buy because by the time you buy it, get it fixed up, you're getting this listed once springtime's coming. Like
Exactly.
everyone who bought last quarter is going to be listing in Q4, which it's just slower. And, it doesn't mean you don't buy, but it's just like now is actually the perfect time to buy when things are slow.
Yeah, that's exactly right. If you're flipping, have a 90-day window, you're going to be flipping into Q1. And that's going to be our first topic. And it was your first prediction all around interest rates, right?
Yeah.
I think the biggest thing to think about is where will be the kind of owner occ interest rate in 2025. Because, you know, I can look at it both ways. And, if rates are, call it 6%, I think the housing market acts one way. And if rates are below 5%, it acts entirely a different way.
Oh,
So
yeah.
when you look at your broken crystal ball, what are you kind of planning for?
Um, I mean, obviously it depends who gets into office. I think Trump will lower I mean, obviously he doesn't have control, but people say that, but it's like he's gonna push for it way
Yeah,
harder.
he'll be
So
loud. He'll be very loud.
yeah, he's gonna make noise about it. So that has an impact whether people believe it or not. So yeah, I think at the end of the day, it really depends who gets in office. And either way, it's gonna be in the fives for sure. And it could potentially dip below five if things started to get really bad. And
Yeah.
there's still a chance that things could get worse.
Yeah. So let's talk about really bad because again, on one hand, we're talking about interest rates below 5%, which I think unlocks marginal supply, which is the big missing piece for a broken housing market. But getting really bad, does that mean recession? Does that mean a spike in unemployment? What does really, really bad mean to Ryan?
Um, I mean, it's probably selfish, but I just look at my own business and I look at the behavior of the people I do business with. So, for example, I look at, hey, how are my private money lenders? Like, are they tightening up or everything else? What are the hard money lenders doing? Are they tightening up? So I look at
Mhm.
like how it is attracting capital. I look at inventory, right? How's the housing inventory? Is it going up? Is it going down? So, that's something we watch. I also just look at my general businesses like education and selling leads and everything else. And I say, are people spending less, because that's just like what an economy is all about is, how much are people spending? And
Mhm.
so it's not necessarily all about investing. But when I look at normal consumer behavior in my other businesses, I'm like, oh, dude, people are really tightening up. And we get so many leads. I mean, I get hundreds of leads a day across all my businesses. And so when my guys are talking to people, I get reports and I'm like, hey, tell me about what you're hearing, what you're seeing. And I mean, for the last year, I mean, the amount of people who are just broke, don't have
Mm.
money at all is it's alarming. And it's also alarming behind the scenes because I talk to also really high level people and they're tightening up. I myself am tightening up on my own spending, on how I run my company, how lean we want to be. And so I know if I'm tightening up and I know I'm pretty good, like,
Yeah.
what does that mean for everyone else?
Yeah, I love this conversation and the insights because you do have multiple businesses and you're getting probably daily and certainly weekly summaries across that is the consumer is who I've studied for 30 years.
Yeah,
When you have an econ degree and you make that your passion, you have to choose your discipline. And mine has always been the consumer.
that's
Because
my
if
degree too.
because if I can figure out what the consumer's doing,
Yeah.
I can figure out most of the economy. Right? The
Yep.
government's going to do what they do, spend more, spend less. Businesses will do what they do. But if we're truly 67% of the US GDP, that's the elephant in the room. And I think you're absolutely right. The consumer has pulled back in a large way.
Oh
The
yeah.
the question that I have is is this just a retreat from the heydays of stimmy checks and free money and no student loans and nobody has to pay rent and all of that nonsense to something game changing? Or is this, hey, let's take a pause button because we have this most contentious election of our lifetime. We don't know who's going to win. The country's split. A lot of hate, fear, recession, World War III with Israel invading Lebanon, just all this crap. Do we just have consumers pulling back for a little bit? Because I know consumers can pull back for 6 months, but the average American consumer doesn't pull back for longer than that. They just historically can't do that. What do you think?
Well, I think it's already happened. I mean, it's been happening. So I think at least for the last year, I have seen it.
Okay, a
Yeah,
year.
I've seen it for at least a year. So consumer pullback is already happening. And I think that next year it's going to rebound from where it's been the last year and a half. But and once again, right? I don't even look at like what the US metrics are putting out because we already, as we found out, they've been lying about a lot of things. So
818,000 jobs gone.
yeah.
It's like,
So I don't even look at the data on that. I just literally look at my own business and
yeah,
consumer behavior. And I'm like, I can already tell people are pulling back. And to be honest, when you're running a business, it really doesn't matter what other industries consumers are spending on and everything else. Like it matters like in your industry, how is it going right now? Because I don't have a restaurant. Like, what do I care if people are eating out or not?
right.
So at the end of the day, like I've already seen it for the last year. Consumers have pulled back, and I've seen it from my competitors and friends. My friends are my competitors too. And I've just seen them have all the same results. So it tells me that, okay, this isn't like a problem in my business. This is an overall problem with consumers.
Yeah.
That being said, my prediction is I think next year's still going to be hard regardless, but I think it's going to be better than this year.
Yeah. It'll be less hard. Yeah.
Yeah.
I
And
think one
and
of
to
the
go to your
things,
point, is that normal? Basically, I think what you were getting at was, is that normal or is that or are we in a recession? And I do think we're in a recession. I don't think it's normal. I think
okay.
that to me normal was 2018, 2019, and
Yeah.
then things got weird in 2020 to 22.
Yeah.
And I would say 23 and 24 have been harder than 18 and 19 for businesses.
Yeah.
So, yeah.
I think 2025 is going to be better for most people in real estate. But let me explain why, because I don't think a lot of people understand why I believe that. I think for a couple of years, the fakers, the pretenders, the wannabes came into the business for quick cash. I think a lot of them had some early success. But what we've seen over the last 18 months, to your point, is it got harder. And we've seen 60% of mortgage originators gone. We've seen real estate agents leave by the droves, gone. We've seen your competition, the 1-2 man operation who was wholesaling a couple of deals a month, gone because they're not marketing. So I think 2025 is better for the people still in the game because you've lost 40, 50, 60% of the competition. So you don't need a big feast to eat well if you've lost half the competition.
Well, and I've seen it, and this is why I know it's an overall economy problem. I've seen it not just in wholesalers and flippers and everything else, but I've seen it also in the digital space. I've seen coaching companies shut down. I've seen people who, had all this demand to want to create content. That demand has gone down because people are like, dude, I ain't got time to try and create content. I got to make money somehow.
Yeah.
And so, overall, I just think, yeah, 2025 is going to be better. I would say 2025 would be what we would call a normal year.
Okay.
And then I think that 2026 could get back to like, hey, things are, much easier now.
The economy is expanding again. We've got to pay for a lot of sins. I mean, we've racked up a lot of debt. We've got a lot of consumers right on the edge. So it takes time to kind of work that off.
Yeah.
So 2025 is gonna be
And by
tough.
the way, my opinion is also subjective to like what I see and feel, but also too, some of the smartest people I know have the same opinion. So that
Mm.
helps me have comfort in planning.
Yeah, one of the things I love speaking with you is you have access to a Rolodex of folks most people can only dream of. So hearing your secondhand, I guess, feedback from what they're getting is much appreciated for guys like me and obviously my audience. The
Yeah.
next thing I want to talk about is leads. Another thing that you talked about in one of your 6 forecasts for 2025, and I think you're right, is the cost of leads is going up, right? You
Oh
talked
yeah.
about in your focus and you switched to Facebook because now that's the cheapest thing versus TV ads and mailers and all these things. I know I've heard you talk about Lead Kitchen. I want to hear more about that because again, that's not my area. But why don't
Yeah.
we just talk about generally leads getting more expensive and then tell us about Lead Kitchen because I really don't know what it is.
Yeah. Well, number one, right? I think marketing is just getting more expensive, period. And I was literally with yesterday I was with Ty Lopez. And so people watching this probably like, oh dude, not this guy.
Well,
But
I saw that you were in his mansion. He's got a mansion. He does masterminds at or something.
yeah, we were at a 25,000 square foot mansion. I'm like, bro, this is like deja vu. I'm here in your garage. You got a Lamborghini right here. You're in a mansion. This is deja vu. And so I was like, you're running back the same playbook. If it ain't broke, don't fix it. So no, but we were just talking about because he would know about marketing. He's
Sure.
spending so much, millions a month on marketing. And he's like, dude, yeah, like if you're not really good, you're toast in marketing today. He's like, when I was doing that Lambo video in the garage, he's like, bro, my cost per click was like $1. Today, that same click costs $20 or
Mm,
$8 or what it's literally 8 to 20 times. And so he's like, you have to just have everything so dialed in for it to work on marketing. And
mm,
this is true in any business right now. The cost to acquire a lender if you're trying to raise capital, or to acquire a student if you have education, or to fill an event, or to, you know, get in front of a motivated seller. The cost is going up everywhere. And the problem is, the profit isn't rising with the cost. So, wholesale fees have still remained relatively unchanged for the last 5, 10 years. Like people still make 10, 20 grand a wholesale. Flips are still 20 to 40 grand a flip. Like it's not rising, even though the costs are rising. And that's why this is such a unique recession, because in a recession, usually prices fall, but prices have been going up of everything, yet people have less money. So
mm.
it's like a deadly, deadly combination. And, long story short, I just kind of noticed this trend and I realized I had to innovate something new because what I was currently doing at that time wasn't going to sustain. And so I did, dude, I've done everything, man. I've spent millions on every form of marketing you can imagine: direct mail, TV commercials, pay per click, cold calling, texting, everything. And I just kind of looked at the landscape and I'm like, wait a minute. My cost per lead's going up significantly with TV and PPC. I used to get a TV lead for like $300 a lead, which by the way, was still like, holy crap, $300 for one lead's a lot of money.
Yeah.
Well, now it's 500, 600.
Oof.
PPC was like 800. It's like one lead. So you
Yeah.
better be really good at closing and
Yeah.
converting if one lead's $800. Not to mention, the only cheap way of doing leads was cold calling and texting. But guess what? the government's cracking down. Providers are just, they're blocking numbers, spam, they're not going through. There's more legal stuff. Dude, I've been sued for like 40 grand
Mm.
cold calling,
Yeah.
and I had to pay it out. So cold calling ain't even like risk free. You do it. There's something that could happen to you.
Yeah.
So anyways, all that to be said, I was like, there's got to be a new way. There's got to be a better way. And I just kind of looked at my original business and I'm like, well, I run millions of dollars of Facebook ads for, events and coaching and services. Why don't I try running that for motivated sellers? I haven't seen anyone really doing it. So I just start doing what I do best and I start making ads and I start writing copy and making funnels and all this stuff. And then sure enough, I realized that, dude, this is the golden goose because nobody knows how to do it. And,
Mm.
these same inbound leads that were $800 are now $200. And, that's just Vegas is an expensive market, but we have clients in Florida and Texas where they're getting $50, $60 inbound leads and they're getting
Wow.
them same day. They're not having to wait to send a piece of mail or hire a VA and whatever. And they want offers today. So long story short, I built it for myself and then so many people wanted us to do it for them. So I just said, all right, let's just run my ads in your market. And so now we run my ads, my face, everything, just
Mm.
saying we'll buy your house and, our clients get those leads. So that's how
Wow.
it works.
So is this just leadkitchen.com, or if
Yep.
somebody wanted to know more, where do we go?
Yep. Leadkitchen.com. Super
Very
simple. We
simple.
got a video on there that kind of explains it all.
Yeah. Folks, if this is where you're playing, you might as well go check out leadkitchen.com. Again, $200, a lot better than $800.
Yep.
Give it a look. The next thing I wanted to talk about that you were highlighting was you thought that rentals might actually cash flow, right? We've been in an environment where rates are high, prices are high. The long-term rental game was tough, if not impossible, in most of the country.
Yeah.
Why don't you talk about that?
Yeah. I mean, right now, dude, in most major markets, if you buy a rental at even market value, you will not cash flow.
Yeah.
You'd have to put down significant money for it to cash flow. And it's like, everyone here listening, especially to your show, wants to buy rentals. And to be clear on your show, just so everyone knows, you might see me talk about hating on rentals and reels and all this stuff. But I made a post the other day that people really liked, giving my real thoughts on rentals.
I
Actually, I'll
saw
read
that.
it because I think it's important for people to know, and it just ties into this whole premise. So, basically, I put my 5 truths about rentals so that people understand. So I said, number 1, if you're broke, don't buy rentals. One repair, one vacancy, one problem will wipe you out. And $200 a month ain't going to change your life if you're broke. Now, if you got money and you got wealth, okay, stack them up. It's all good. But you're not going to get passive income being broke buying rentals. So that's number 1. Number 2, if you make great active income, that should be everyone's first goal in anyone who wants to make money. Like figure out how to make active income. You did it as a salesperson. I did it as a flipper. I don't care how you do it, but figure out how to make active income today. And I said, if you make great active income, that's great. But understand with rentals, the big 3 things that make you money are appreciation, depreciation, and principal pay down. Like those 3 things
Mhm.
trump cash flow in the long haul of it. 3, if you're an investor looking for cash flow as your number 1 priority, then there are better opportunities as rentals. And my point with that was, if cash flow is truly the thing, you don't care about appreciation, you don't care about tax write-offs, and you're just like, yo, I want to make 10 grand a month. I don't care how it happens. Rentals really aren't the best cash on cash to get that. And I just said, dude, if you put 20% down on a 300K home, that's $60,000. And even if that made you $300 a month, that's a 6% cash on cash return. That's not
Mhm.
great. Plus you got to get debt and all these things. You could go lend hard money to flippers and whoever else, and they'll pay you 12 to 18%. So, if you want to just get pure cash flow, I think there are better opportunities. 4, the golden goose of cash flow is owning a business.
Mm.
And this is what I've realized over my career. It's like, if I look back at everything I've ever done to make cash in my pocket, my businesses always did it. And whether I built an automated wholesaling and flipping business that produced multiple 6 figures a month, or kind of an automated coaching business, or leads, or anything I've ever done, like that cash flow has far exceeded anything a rental ever could. Now, is owning a business for everyone? Not necessarily, but that's how you would make extreme amounts of cash flow if you wanted to do it.
Mm.
And then lastly, rule number 5 was that look at rentals like piggy banks, get your active income right, dump the savings into rentals, take your tax write-offs from the rentals to offset the income. And any cash flow from those rentals just goes into the next rental, not for living like people are thinking. Like, just think of it like a piggy bank. And by the way, piggy banks are also meant to be broken. So if you need some cash, don't be afraid to sell a rental and get cash. So those are my beliefs about rentals.
Yeah, so I saw that post. I even think I liked it. I might even commented. I agree with all of that. I agree that hey, if you're broke, $200 a month's not going to change it. Go figure out how to make more income. Is that chunk money with flipping or wholesaling? Is that getting a high value skill? Is it being commission based salesperson? Love all of
Yeah.
that. Love rentals being a piggy bank, especially for entrepreneurs. I think this is something you uncovered maybe during 22 or 23 when you had some L stack up. You're like, ooh,
Yep.
this gets a lot easier to swallow because I could sell that, I could sell that, I could sell that.
Yep.
Problem solved, right? We're not, selling the business or going away. So I love
Yep.
that piggy bank. I love breaking the piggy bank when acquired. Fact is, I think Ed Milet said this. If he didn't, I'm going to give him credit anyway. Only 9% of people are entrepreneurs. That means 91% aren't. When you talk about being an entrepreneur and stacking cash, I totally, totally agree. If that's how you're wired, there is no better way to make ungodly amounts of money. But
Yeah.
if you're like me and that shit scares you, if overhead scares you, if
Yeah.
making payroll scares you, no freaking way am I going anywhere close to that. But
Yeah.
again, stack disposable income, have disposable income, buy assets for a decade. You get wealthy. It's the
You got a big piggy
game.
bank.
It's a
But
big
don't
piggy bank.
but the problem is people just they want to like get the passive income right away. And they
Dude,
just
I've said it and I'll say it 1,000 more times. The first 5 years suck. You don't
yeah.
really know what you're doing. Stuff breaks. People lie to you. Your
Yeah.
your your positive cash flow of 300 is truly negative 200. You
Yeah.
don't know how to buy right. Seller finance. It's a
Well,
game.
that's my point is people are so attracted to the idea of what rentals can become 10 years from now, but they think it happens next week. And I'm like, bro,
No,
you got to work the next 10 years and you better figure out how to make money. You better get a skill. You better start a business. You better do something that makes active income. That's what
choose
it's
your
all
hard.
about.
Choose your
Yep.
hard. The next 10
But
years are going to be hard no matter what.
but to your original question, now that that's out of the way, about where why do I think rentals could cash flow next year? Well, I think that people who've been buying rentals, you're going to get a chance to refinance,
Yeah,
and so
I'm already seeing that.
refinancing
Yep.
will now make a cash flow as rates go down. I think that it always takes time for prices to rise once rates drop, so it's
Mhm.
not going to happen immediately. Like, okay, because they just announced a rate drop, and it's like, all right, prices haven't risen yet, So if you buy a rental today, there's a good chance that a year from now, you're going to be able to refinance. Not only are you going to get a cheaper rate now and a lower payment, but you're going to have also seen rents rise, prices rise a year from now, and so now because of that spread, you'll be able to cash flow.
Yeah. I want to talk about something you got going on that I've just heard about cash flow 2.0, especially for category number one. You're broke, but you want cash flow. I'll go to that next. But something I want to talk about, the thing that scares me the most about 2025? You have any idea
What?
what that might be? Government
Um.
intervention. Government intervention. They come
Oh
out with
yeah.
some stupid 7, 8, 10, $15 first time home buyer tax credit.
Hmm.
That 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 scares me because it'll distort the market in a very unhealthy way.
Right. Yeah, I mean, every time they do something like that, it just makes prices and everything go up. So like that, home buyers think they're actually, I mean, home buyers who take advantage of it early do get a
Yeah,
benefit.
early,
Yeah.
early.
But
Yes.
everyone else who uses it later, you'd have been better off with them not doing it.
No, that is the key. Well, I've just
Yeah.
heard about something you're running called Cashflow 2.0. I don't know anything about it other than the sexy title. You got my attention with the
It's
title.
a good
So
marketing hook, huh?
yeah, let's see. You got my attention.
Um, yeah, so basically it kind of goes along the lines of this whole rental thing because like really what we do want is cash flow. At the end of the day, we all want cash. We can't live off equity. We have to make cash every month some way
Yep.
somehow. Now, when you're first starting out, you do this through a job. That's how you make cash flow. Like we don't think of it like cash flow, but it is. It's cash into your bank.
Yep.
And then we're like, oh, well, I want to make cash flow without having to work, right? And we call this passive income, but I started to think about what would my definition of cash flow be? Like if I was looking for a business to start or an asset to invest in, what would be the best things that could happen?
Hmm.
And as I thought about it, that's where I came up with the idea of cash flow 2.0. It would be the like extreme version of cash flow. For all my I'm an anime guy, so like for all my Dragon Ball Z fans, this would be like cash Super Saiyan cash flow, okay?
Hmm.
So, if I was going to go get cash flow today, I'd look for three things. Number one, cash flow that can scale. So the problem with trying to get cash flow from rentals early on, as we alluded to, is that it's very hard to scale. You need
Hmm.
capital. You got to find deals. It's just going to take time. So like the scalability is difficult. It works, but it's just hard to scale. Two, risk. What is the risk with getting the cash flow? And so it's like, well, I can tell you there's a lot of risk with flipping houses. Um, yeah, you could build a house flipping business that maybe you're not involved in, but guess what? If you got millions of dollars of short-term debt on the street, there's risk to that. I know best. I've lost millions doing it. Three, okay, I want something that doesn't take a lot of time to actually get up and going. So it's like I see people are like, dude, should I buy like a laundromat or a car wash or all these things? And I'm like, well, you want to go build a car wash. I see people do them. It's going to take a long time. Rentals will take a long time to build. Um, and then also too, it's just like if we're in a different business, what's the cash conversion cycle to actually getting paid? Rentals are great because you get paid monthly,
Mhm.
but flips are not because you get paid every 6 months. So, all in all, I just started to think about this whole thing, and I was like, all right, like what business models fit, these things the way that we want. And the more and more I thought about it, the more I realized like what a great business model wholesaling is. And this is coming from a guy who I don't know. I don't want to say I've hated on wholesaling. But I was always a flipper, and that's
Yeah.
like my first 500 plus deals. I just always bought, fixed them up, sold them. And, as I got into other businesses, I decided I wanted to do education and content and other things that provide other ways to get cash flow. But the more I kept coming back to things and the more I looked at my longevity of certain businesses, I realized, well, wholesaling and flipping have been there since the beginning and they've never
Mhm.
left. They've just always been around through the thick and the thin. And wholesaling today is actually easier than ever, surprisingly. Um, I just kind of like looked at the model. I'm like, well, wholesaling is infinitely scalable compared to other businesses. Like there's no overhead. You
Mhm.
can do it virtually. I can just do it right here from my
Yep.
office. I can decide how much I want to grow it. Okay. So the scale is much easier than say a laundromat where it's like, dude, I got to buy another laundromat business to scale it. Like one location can only do so much.
Mhm.
Um, Two, the risk. There's almost no risk with wholesaling. You don't have to take on debt. You don't have to do anything. Really, your only risk with wholesaling is what you want to spend per month on marketing. That becomes the risk. And I don't know of any other businesses where the risk is say 10 grand a month in marketing and you can make 100 grand
Right.
and there's no cost of goods sold. It's like a true just 100 grand. So, there's very low risk. The third thing would be time. How quickly can you get this thing? I mean, you can start a wholesale business tomorrow. You get a deal this week, it's closing in 30 days. You're making money. This is not like this long sales cycle of getting it up and going or getting deals to make money. So I'm like, dude, this is kind of crazy that this is the perfect business to figure out like how to automate because of its business fundamentals. So, anyways, then I just started thinking about, okay, if I was starting a wholesale business over today, like how much of it could be automated even if I was a beginner? I was like, well, real estate investors only buy leads. Like almost majority of them do not make Facebook ads themselves or cold call themselves. Like they buy leads from some way, somehow. They hire VAs. They'll do something like Lead Kitchen. They'll buy leads from paper lead providers. Like you buy leads, and you can buy leads on any budget. So it's one of the only businesses where marketing can truly be automated because you just buy the leads. I can't automate my marketing for selling WealthCon. Like I have to actually make ads, come up with content, be creative, make funnels. Like I have to do everything to sell that event. And other businesses are the same. A laundromat can't automate their marketing. They have to go like create ads and do all these things, right? But real estate's a weird business where it takes no creativity on the marketing side. You just buy it. So, because we all sell the same product, we all just get the cash offers the product. So we all have the same product. So marketing can be automated. So then I said, okay, well, what are the other two aspects? There's just acquisitions and dispositions. Well, dispositions can now be automated because we have things like novations where we can list it directly on the MLS. We have things like Investor Lift, or we have a software called Wealthy Deals where we can literally pull every cash buyer instantly. That used to not be a thing. I mean, 5 years ago, that wasn't a thing. You had to like go to meetups and go to Facebook groups and post your deal on Craigslist and like search far and wide to find who would buy it. Today, it's never been easier to do dispo. So now we know that's like way more automated than ever before. So then the last piece just becomes, can you lock up deals? And for us, we've actually changed our entire model of locking up deals where we used to go on in-person appointments. We used to go in their house and we could only do it locally here in Vegas. That's no more. We close everything over the phone now, and we actually close it most of the time in one call. It's
Wow. One
crazy.
call
Like,
close. Wow.
yeah, like we switched our whole process from like spending 30 minutes on the phone, like digging deep into pain and motivation and all this stuff. And like, dude, I mean, we did that for years. We taught it for years. Now we literally jump on the phone and we're like, yeah, so how much do you want for it? Like, it's just straight to the point. And it actually works better because sellers and people of just buying anything now want everything now. And also,
Right.
too, they know a sale is coming if you you do that, you play this game of cat and mouse. So
Right.
they appreciate it when you're just like, hey, dude, your time's valuable. Like, what do you want for the home? And we're now able to give them more for the home because we have tools like Novation where we can pay way more for properties. And this is why I think like normal wholesalers are going to go out of business too, because if they don't know how to do things like novations, they're toast. Because I can offer 400,000 for a home that's worth 440 now, whereas the wholesaler's got to offer 350. So if I can offer 400 and they can only offer 350, what are they going to do? They're going to get smoked every time. And for those who don't know what a novation is, it's essentially like a net listing. I would go list it for 440. I'd still have to pay any repairs, the realtor fees, all this stuff. But even once I pay all that, let's say it's a 420 net, I've guaranteed them 400.
Right.
I net 420. My fee now becomes 20 grand. And I'm able to pay and give the seller more money in their pocket versus lowballing them like we've had to do for years.
Right.
So all in all, when you just look at the business today, marketing's easier, it can be automated. Sales is easier, it's over the phone, virtual, and the close is quicker. And dispo's easier. It's like, all right, well, you want to get cash flow today, like quick. I don't know any other way to do it that's easier and can make you 10 grand a month. Like you could make 10 grand a month pretty quickly doing this method versus rentals will take you, I don't know how long, 5 years, 10 years.
Yeah.
Like,
At least, yeah. At least 5 years. Best case.
yeah.
Right.
And so to me, it's just like, if you want cash flow, you got to work and build something. Like if you want it quick, there's no quick thing. You got to work and build something. And I think this is the thing to build.
So I heard of Cashflow 2.0 kind of through the grapevine. It sounds like you're putting on a 3-day online event. Do I have that right?
Yeah, yeah. People can go to cashflow20.com. So that's the number 2, the letter O. But yeah, I'm doing a 3-day event, first time ever. So it's October 9th to the 11th. And yeah, dude, I'm just going to teach them everything I just explained, but obviously way more in depth. Hey, where are the best places to buy leads? Obviously, they could buy from Lead Kitchen, but there are other places too. You don't have to use my stuff. Like overall, it's like you'll have everything you need to build an automated wholesale business by the end of the workshop.
So again, just so they go to the right place so they don't get confused, Cashflow, one word, the number 2, and then the letter O.com.
Yep. Like H2O.
Like H2O.
Like
I
cash
like that.
flow.
So when I hear you kind of tell this story, what I hear you talking about is, I used to call it chunk money, right? I got to go out and create chunk money, a 10,000, a 15,000, whatever it is. And if I do that enough times, that will allow me to carve off some of that chunk money, buy an asset, plant it, let it grow over time. Is that kind of the vision for this? Because otherwise, it's just another job, unless you're peeling off some money to buy assets.
Yeah, I think the progression is okay. Let's say whoever's listening is like, all right, that all sounds good to me. I'm down. It is going to start out as a job, right? Everyone starts as a
You got to
solopreneur
do
at some
something.
point,
Yeah.
right? And if you want to go hire people, which is actually very easy in this model, you still got to know what to train them on. Like if
Mhm.
you've never done it, it's hard to hire
Oh,
people.
yeah. Yeah.
So, anyways, like, okay, as far as like my belief in this, you really only need about 2 people for this to be automated, right?
Mm.
Because if you have a sales guy and a dispo guy, those are the 2 main things because your marketing's already automated because you're just paying a third party. So then you just got to make sure sales guy does their thing and your dispo guy does their thing and the business is done. I mean, that's what my business does right now. And by the way, my business doesn't have like all these employees on that side of things. We have 3 acquisitions and 2 dispo. That's it. And
Mm.
so they're able to get all these deals every single month with just that many people. And I don't close any deals, right? I'm busy making podcasts and doing everything else. So it can be automated once you build it out. So that's number one. And so to me, it's like, well, that's an asset. Like I don't know what its value would be worth as a business. Like you'd need years of proof and all this different stuff. But long story short, it's like if you don't have to put a lot of time into it and it's making you cash flow every month, well, there's your asset. So, number one, I want them to start thinking about their business as an asset because the most valuable thing I have built in my life has been my businesses because those make me
Mm.
money. And I'm not directly closing people and in the day to day. Now, there's still things I do. I'm still the face. I still coach them up. I still give them guidance. I'm still a leader, but that's so minimal compared to the amount of income and everything they produce. So, overall, think of the business like an asset. But here's the best part is the cool thing about building a wholesale business is you still have the ability to cherry pick what you want to keep long
Yeah.
term. And so, all these rentals that we all want to buy, I still love rentals. Like you make all this cash, let's say you're making 20 grand, 30 grand, 40 grand, you take some of that money every month, you're going to get a deal that looks interesting and maybe you start to keep one. Maybe
Mm.
you start to keep 2. You come up with a plan. You're like, I want to buy 5 this year. I'm going to cherry pick the best 5 that my marketing produces. And then boom, you cherry pick them.
I think that's genius because again, Grant Cardone has told this for a long time, right? The whole idea is to go do what you're really, really good at, create active income, and then take that active income, buy assets to produce cash flow, and then ideally live off the cash flow, right? Go
Yeah.
buy the stupid toys, the stupid watches, the stupid cars with the cash flow, not the active income. And that's really
One thing Cardone doesn't ever talk about though is that his active income is not really that active. Like that is his cash flow. And I'm the same way.
hmm.
Like Cardone makes hundreds of millions a year from his active businesses.
Mm-hmm.
But I know for a fact that to him is also cash flow, as well as this multifamily and everything else. They're both assets for him.
Sure.
When he says he's a billionaire, it's not from real estate, it's from the value
Of the
of those
business,
active income businesses.
for sure.
And
Yeah.
so people need to realize that too. It's like your business should be looked at actually more importantly than your rental portfolio or the stock market, or that's the thing that's going to feed you. And
Yeah.
I know not everyone here is an entrepreneur, but like I would think you probably value your job more important than your rental portfolio, definitely when you're starting out. Because if you
Definitely when
lose
you're
your
starting out.
job,
Yeah.
yeah, like if you lose your job, it's like, dude, you're toast. Your rentals mean nothing. You might
Yeah.
lose them.
Piggy bank, break the piggy bank.
Yeah.
Yeah.
So, and as an entrepreneur, we got to think of our business as more valuable than these assets because this is
Yeah.
the thing that's going to keep getting them.
Yeah, something I always say, Brad, I always talk about that Ed Milet quote, 9%. But the other thing is when I think about the people that I know are truly wealthy, they're the business owners, right?
Yeah.
There's some number, you're going to be a millionaire or worth 3 million, shoot, maybe 10 million as a mom and pop landlord if you
Yeah.
do it long enough. But if you want to be worth 100 million, half a billion, a billion, you've got to be an entrepreneur. It's got to be the business. That is the asset that brings in most of the wealth. No question. The upside of an entrepreneur's
Or greater.
100x
Yeah.
or greater.
And once again, right, that I think you bring up a good point of understanding what your goals are because, and that's where I always whenever people come to workshops, actually, it's one of the on day one, we're going to do it. The exercise is defining actually what the end goal looks like, because most people don't even think about the end. They're
Yeah.
just like, yeah, dude, like, if I get like 50 rentals, that's good. And I'll be like, why?
Yeah.
Why do you need 50? Like, just where's that number even come from? Oh, I don't know. It just sounds good. I'm like, no, like, it better have a purpose or a meaning behind it, because you're just going after something for no reason is stupid. That's even
Somebody
dumber
else's
than,
number. Yeah, totally
yeah.
agree.
So, like, let's actually reverse engineer what it is you really want with your life. What kind of purpose, what kind of lifestyle do you want to live? Because that's going to help us figure out how we got to get there. Because you
Yeah.
may find if you have big vision for your life, right? Speaking financially, you might realize you're like, bro, you can't work a job. You have to start a business if you want to reach this level of wealth. There's no other way around it.
Yeah.
So, if that's the case, what are you going to do with that new information?
Yeah.
Or you might say, dude, I just want 5 million. Like, I want a $5 million net worth. And it's like, okay,
Yeah.
what time
Lots of ways
frame?
to get there. Yep.
Yeah,
Yep.
what's the time frame? 20 years? Okay. Do you like your job? Oh, you do? All right. Well, we can work with that. Okay.
Yeah.
Let's do that.
Totally agree. Love that. I
But
guess
you
the
know
last
what's
thing
funny? But
yeah.
well, you know what's funny too? I'll just add to this.
Yeah.
Like, as much as, people are like, well, okay, I do want to buy rentals. It's like, well, you're a wholesaler, right? Because you're looking for great deals. That's all a wholesaler is. So if you work your job and you're looking for your next rental on the side, whether you realize it or not, you're just a wholesaler. You're just looking for a great deal. And instead of selling it to somebody else, you choose to buy it for yourself.
Yeah. You're a wholesaler with one acquisition method, right? And disposition. Yeah.
Yeah. Well, you have the same acquisition method. Like, we as wholesalers, it's like, hey, if you were to say, hey, I just wanted to use Lead Kitchen, it's like, all right, you have one acquisition model of like, hey, we get leads this way, we
Mm,
try to lock them up this way.
got it.
But you still just, instead of selling it to somebody else, you just keep it. So it's like everyone who wants a rental portfolio by default also starts a wholesale business,
Hmm.
whether they realize it or not.
Yeah. I like that. I like that. I guess the last thing I wanted to ask you about is what is Ryan Pineda's life heading into 2025 versus 2024? If I remember the story in 2024, you had all these businesses, you were going through a little bit of your first rough patch, you simplified. I think what I see you doing into 2025, a lot more focused, a lot happier, a lot less stressed. Am I seeing all that right?
Oh, they're still stressed, dude. You're still
Damn
I don't
it.
think stress ever goes away, but definitely less for sure. It seems like the storm, I've exited the storm. I would say the storm lasted 2 years.
Mm.
Um,
Well, that's good to hear.
well, maybe I was in like the hurricanes that you see today right now with everything going on, and now I'm just in like bad weather.
Right.
So, I think the sunshine is coming in 2025. I got some things I still like want to really build out this
Mm.
remaining quarter that are going to
Nice.
lead to a lot of prosperity in 2025. But also too, I'll go on record and say this. I think I accelerated my storm somewhat purposely to just get it done and over
Yeah.
with and out of it. I actually think most people's storms are happening next year. Big guys.
I would agree with you because I've been through this story before. I tell a story about a guy who was worth 10 million bucks. He was flipping $1 million homes in '06. He did not take one 50K loss on a property because his ego would be hurt. And that one decision started a series of dominoes where he lost everything, including his relationship and health. And I think you're right. There was a lot of extended pretend. There was a lot of hope. I too believe a lot of people's pain is going to show up in 2025 because they didn't take the small loss. They didn't take the small L. Now the big L's coming.
Well, and also too, I just know because I haven't seen enough people adapt, and I see people who are still running the same playbook,
Yeah.
and I'm like, that doesn't work. How are you? Huh? And then, later is like, oh yeah, they lost it all. They did this, they did
They
that.
did
And
that.
I'm
Yeah.
like, yeah, okay, now it makes sense.
Now it
So,
makes
anyways,
sense.
yeah, I think anyone watching this, just realize, things are hard. Things have been hard for real estate investors the last 2 years. And the bigger you are, the harder it was. So
Yeah. True.
the big guys are struggling even more than you might even be struggling. And
Yeah.
the only way out of it, in my opinion, is to make more active income. Like, that's how you get out of the problem. You got to make money to get out of a problem.
Yeah,
So
there
that's
you
my
go.
wisdom for the day.
Well, Ryan, I always appreciate our conversations, both when recorded and not. I appreciate you. Thank you for all you do. Again, leadkitchen.com, cashflow20, the letter O.com for a 3-day event. Closing thoughts, and where can they find you?
I would say just go to those websites. You can connect with us and the team and everything else. Obviously, we're on social media as well. But yeah, closing thoughts would be, I think I've told you this before, but I got a lot of appreciation for what you're doing, reaching the, corporate people and people who don't want to quit their jobs. And it's funny because, like, in my mind, I'm like, everyone wants to quit their job. And it's just, I just don't know any different.
Yeah.
So, I just appreciate what you're doing, reaching your people. And then I shared this on my podcast with you. Is like your perseverance to make so many videos without caring the result, I think is a huge um example that you're setting and that I think people watching this need to follow is like, if you haven't had success to this point, how many at bats have you taken?
Oh, exactly.
Right? You made thousands of videos before you
Yep.
got to 10,000 subscribers,
Oh,
you
yeah.
know?
I did
And it's
over a
like,
thousand videos before I was monetized. You want to talk about something crazy?
yeah, 1,000 videos for $0, right? And most people give up after a month of trying something. They
They give
buy
up after 3 videos.
Yeah, it doesn't matter what it is. They talk to 5 sellers and they're like, they all said no. It's like, yeah, the
Mhm.
99% will say no.
Yeah.
And, it's like, dude, perseverance is what matters. And I said this yesterday on Instagram. I was like, hey, this is a reminder, guys. Business is really hard. You're going to, and this is corporate world, business world, investing, you're going to lose money. You're going to make people mad.
Mhm.
Great ideas you have aren't going to work out. But at the end of the day, as long as you just keep going, you haven't lost. They're all just
Right.
lessons. They're all, you didn't lose. You just got to keep going. You only lose when you quit. If you quit, you have lost.
Yes. Love that. Ryan, you're amazing, man. Thanks for being a friend. Thanks for being here. Take care.
All right, bro. See ya.
Later.